Uh, Good afternoon, everyone. This is Insurance on the Blockchain using Etherisc. This presentation is going to review both the insurance industry as it currently stands and specifically Etherisc, a blockchain company that's created a few test products for the insurance industry and also is broadening its goals to change the insurance industry using blockchain technology. The agenda today, we're going to go through, as noted, a bit of the insurance transaction and the range of products covered in insurance around the globe. And then we'll delve into Etherisc's flight delay app, which was their first real test case for how their product might work, built on the Ethereum blockchain. And then Insurance Decentralized, which is a bit more of Etherisc's long-term goals using blockchain to change the way insurance works. So for those unfamiliar with insurance, it covers physical property, casualty lines, human life around the world. And it's a very complicated and overly expensive process to distribute risk throughout the world. It starts with an individual or company who usually works with an agent or broker, and that agent or broker most often takes a large commission for placing the business into the market. That broker and agent is responsible for transferring information to insurance companies, and the insurance companies use analytical tools and underwriting expertise of humans to generate a price and bind the policy. At that point, number 4, the insurance companies hosting both data, the money from clients, and paying claims, and they also go through a very similar process to hedge their own risk around the world. So that creates a whole other expense cost of another broker, another insurance company behind them, very often financial institutions as well. When these payments are delayed, when losses occur, the insurance companies have to assess damages, they have to verify claims, and very often they have to combat fraudulent activity to ensure that the claims that they're paying are stipulated in their contract and are legitimate claims. So that's a long process, especially after disasters or any loss event. And so the payments are delayed for a long time until they're eventually paid out through the broker agent and back to the individual who purchased the policy in the first place. And that entire cycle can take place whether it's for your auto insurance or whether it's for a multinational corporation buying insurance for their construction projects around the world. And what we're going to get into beyond this is the idea that the insurance company involves so many siloed data centers and companies that are constantly trying to verify data and get the data correct that aligns with the reality of what's in the world and what they're insuring and verifying claims. And because of that, there's a spectrum of very simple products that's easy for, and then there's, on the other end, very complex products. Any questions so far? Okay, as long as everyone follows that. So spectrum of insurance. With this here, it's just key to understand that when people talk about changing insurance, it very often is going to focus on low complexity exposures. Those characteristics are going to be pricing based almost entirely on data because data is both readily available. It's a very known exposure. There's for personal auto insurance, there's many cars on the road. We have plenty of historical data around that. It's changing, but it really doesn't require human expertise so much as crunching of many numbers. And the claims are relatively easy to verify. Key examples of this are parametric insurance, which means insurance that is tied to a specific parameter that can be that triggers out claim payment, and personal lines insurance. So personal lines would be your auto insurance, maybe your home, some smaller types of coverages. The example in the low end complexity that we're going to get into with Etherisc is flight delay insurance because it's parametric and it's very easily verifiable whether a claim should be paid or not. But there's also larger parametric insurance called Catastrophe Bonds, and that might trigger out if an earthquake exceeds 9.0, as it did with the Japanese Tohoku earthquake. So that's another example where it's an earthquake theoretically might be high complexity, but the way it was created was very simple so that the claim could immediately pay out. Medium complexity relies a lot on data, but there's still going to be human oversight required. Data is increasingly making this medium complexity much easier to price so that there's less human expertise involved. Artificial intelligence will certainly be applied to these types of businesses. And this is a whole spectrum. There's not really three clear buckets, but more of grays in between all of these. The medium complexity, one of the difficult things with many of these lines is that claims can be complicated. So they require human expertise to both review the contract wording and corroborate information from, say, the individual legal statements, the lawyers involved. But for many of the medium complexity accounts, if they're small enough, they can seem to be much simpler. We have a question here. Do certain types of insurance lend themselves to automation through blockchains better than others? It's a really great question. While we're talking about how some lines of business can be priced purely on data, what the difficult part of the insurance industry is that data isn't really housed in any one place. It's housed by every single insurance company. So the largest insurance companies normally have the most data. And although there's new companies being launched that create new data, very often the insurance companies purchase those to use as a value-added service for their own and to increase their own data knowledge. What would be ideal is if the entire insurance industry had access to the same data generated by a blockchain. I think that's why insurance is such an interesting industry to test this case, is that while everybody could benefit from a shared data layer, there's really nobody yet taking ownership over creating those data layers for the insurance industry. At this point, you see a few initiatives by companies creating internal blockchains and a few consortia that have collaborated to say that they want to start contributing to a shared blockchain. Otherwise, some big players such as Nationwide Insurance has created a test pilot of proof of insurance for auto insurance so that both Nationwide and other auto insurers can quickly verify whether after a crash that everybody has insurance coverage, which is a key step towards reconciling claims between two drivers that get in an accident. So we'll get a little bit more towards the view of blockchain in the next slide, but I hope that this spectrum of insurance gives an idea of the idea that gives some context to the idea that while low complexity will be very simple insurance, it'll go all the way up to high complexity, which is going to use a few data sources. Very often the high complexity accounts involve multinational corporations, commercial liability. For instance, what I specialize in here in my day-to-day job is marine insurance, which often involves major cargo exposures that are going around the world constantly. And it's very difficult to track where that cargo is. The data is just not entirely available. And IBM has worked with Maersk to try to create a digital trade layer, which is essentially a blockchain that they think will help the entire cargo industry and transportation industry to accurately track supply chain logistics around the world. And they believe that because Maersk does so much shipping, others can buy in as well and all contribute to the shared data layer. And insurance companies would certainly benefit from that by having transparent data about real world exposures. Another question here is, do you expect low complexity solutions to be migrated to blockchains before back office data is migrated or vice versa? Another really good question. The insurance is so entrenched as it is now because it's both heavily regulated and because there's so many different players within the existing infrastructure that it's very hard for one company to launch and disintermediate the brokers on the front end, the insurance companies, the data providers. So while some of the back office procedures between insurance companies themselves will likely move to a blockchain through consortia, and that's similar to the way that banks use SWIFT and are adopting blockchain processes in order to, you have few players if you're working with major industry players, and they can all share information with each other in a blockchain. What would be more difficult are changing some of these low complexity solutions. And what we're going to get to with Etherisc is the reason that Etherisc identifies a huge opportunity is that they think they can take some of these low complexity solutions and do them at a fraction of the cost as the existing industry does. And really the insurance industry, because of data, is going through a a long and painful process of making the entire process more efficient, because as it is now, it's often quoted as the idea that if you pay $100 for your insurance policy, probably $40 of that is just going to cover actual expenses. So when we get to Blockmatics with flight delay insurance here, we're looking at a product that really doesn't require that 40% expense to go through a broker and to do all the complex underwriting. It's a very simple product in the sense that here you have something that's entirely built on the blockchain. It's automated with smart contracts that will pay out for claims, and an oracle feeds in from third-party sources to verify whether the claim should be paid or not. So Ethereum built this flight delay app or decentralized application on the Ethereum network, hence their name of Etherisc. They launched this after DevCon 2, or I think leading up to DevCon 2, and it's a really excellent test case for flight delay insurance because there's ample data about delayed flights around the world and for specific airports. And also, it's very easy to verify a claim right when the plane. So on the front end, the first point is that there's ample data, so you can predict the likelihood of a claim with pretty good accuracy, and you can adjust it based on the data you receive back. And then on the back end, it's very easy to verify whether a flight was delayed using impartial sources. And so you both can price it very easily, and you can verify a claim and pay out a claim very easily. And because of that, Etherisc was saying, based on all their work and building entirely on the Ethereum blockchain, they've lowered expenses from, instead of say 30 or 40% for some insurance policies, they're down to 3%, which means that they should be able to offer a product that's incredibly more affordable than what the insurance industry as a whole can do. And that's because they're automating the app, right? And they are pricing and binding a policy all in one step. A customer can enter the data, pick their coverages. Just trying to pull up. Just want to make sure I have the chat here. So, good question is, how is Etherisc using a smart contract to automate the insurance policy? So their original experiment or test case with this flight delay insurance was an interface. You download MetaMask, and you could plug in your flight to and from the date, and by plugging in the delays, you could check your pricing, and it would generate a price of. So you'd see that if your flight was delayed 3 hours, you would be paid 3 times whatever money you put up for your insurance policy. Insurance is really, it's providing odds on risk. It's allowing you to hedge risk that you'd rather not take, and the insurance takes on your behalf. So when you enter in that data and they generate the pricing, the smart contract captures all of that. And now the smart contract knows that if this flight is delayed 2 hours, it pays out X. And if it's not delayed 2 hours, it doesn't pay out at all. So you know that when you get delayed, and government systems that track flights patterns, they'll quickly feed into the Ethereum blockchain. Etherisc set up an oracle to call upon that data, and that data will then be pulled in and run against the smart contract, which will then decide whether to pay out or not based on whether the flight was delayed. And because of that, there's really no reason for anybody to touch the policy at any given time. The user inputs their information, the policy is bound upon payment, and the policy pays out according to industry data about whether the flight was delayed. The key thing that happened with Etherisc, obviously, is that Etherisc had a successful testing of the pilot. It worked well. They saw that they think that they can build a business model that works very differently than the current insurance system. But as with much of cryptocurrencies right now is that people don't really want to buy insurance policies in Ethereum when it's as volatile as it is. And so to make it more accessible, they did shift to a US dollar version, which has blockchain on the back end, but does have to interface with someone paying in US dollars, even though the process in the smart contract will handle some of the back end processes and still make it a more efficient process than the traditional way. And in addition to that, because insurance is regulated and you need a certain capitalized entity to be offering these policies, they've partnered with a Malta-based cell insurance company, Atlas Insurance, and offer, I believe it's Only Italy and France delay flights right now, but they are using it and applying it in a real world context. There's another question here. What do consumers need to know? Do they need to understand how blockchains work to have the insurance industry benefit from it? That's a really excellent point. And the short of it is no. There's really no reason that a user would have to understand blockchain. Obviously, for Etherisc test pilot, downloading MetaMask and using Ethereum would have been a highly specialized idea, but using the US dollar version based on an actual insurance company, really, there's no need for the user to know what's behind the user interface. The blockchain is able to streamline the processes of an insurance company without really changing the interaction with the person on the other end. So this works really well for something simple like flight delay insurance, but for something like a multinational property account, that obviously will stay for the foreseeable future in the traditional model of insurance. And that's really the tug of war going on now. The more simple stuff that can be codified by data is going to be the easiest exposures to convert into some blockchain type platform that makes it more efficient. And it'll be interesting to see whether that becomes an industry platform, a disruptor, or whether it's simply just an add-on to some of the largest insurance companies in the world who have typically been buying up these type of startups and making them their own. In another question, beyond the consumer, do insurance professionals need to know how the blockchain works? Really, at this point, the biggest obstacle is people are so entrenched with the idea that everybody has their own data, and so much of the insurance industry works around verifying data. The shift isn't really going to be understanding blockchain. It'll be shifting mentality to understand that you have one data source, and data verification is much less a part of the industry than it has been in the past. When we discuss the food chain of insurance and the insurance transaction, you have so many different areas where the data can be entered in error or mistranslated or not even handed down at all. You have the original client, the broker, possibly an agent as well, an insurance company, another division of the insurance company, other global markets. And each point, that person is trying to verify information they've received and very often not getting the information that they really need. And so with the whole food chain of insurance in mind and the whole ecosystem, Etherisc is envisioning that if you can take data and create products around it and upload it to a blockchain, there's really no reason for the data, the people, the analytics, and the capital all to be wrapped up in one insurance company. Right now, a major insurance company has to have everything in one place in order to underwrite insurance. They need the regulatory approval of their capital, they need the analytics, they need all of the people and processes in place in order to process claims. And because of that, it's these huge behemoths, and it's a very entrenched system because it's very hard to disrupt the entire industry if you have to look just like any other insurer. Etherisc, in the long term, would like to aim to decentralize the whole process by creating an ecosystem that incentivizes people to work together on a transaction. And you can see this particular example has an insured, an individual paying $1,000 in their premium. And so in the old system, we'd say that maybe 40% of that came out for expenses. In this, only $100 comes out for expenses before they pay into the pool. There's also a backup pool, which is what we referred to before, where in case insurance companies don't hold all the risk themselves, they often unload it into other markets, whether those are other insurance companies or capital markets. And this system would incentivize people to be people designing the products, so product designer, oracles, people that are pricing things and also verifying claims. There's going to be a license provider that needs to tie into the regulatory system of insurance because insurance companies can fail. They're very heavily regulated. In the United States, you need licenses in all 50 states, and the 50 states have very different insurance rules in some cases. And then there's also connecting this whole ecosystem to investors that can buy into the tokens, knowing that they can lose money or gain money based on how the claims are paying out in any given year. The idea of decentralizing that, it would make the entire system more efficient and also more nimble because it wouldn't be bundled up in just one or a handful of major insurance companies around the world. So while the idea of a parametric flight insurance product is very easily recognizable, the idea of a more decentralized ecosystem is a much longer term plan, will take a long time to build a community, but will be really incredibly interesting if Etherisc can continue in that aim. What can Etherisc do with the extra money in the pool? That's a really good question. So in this example here, where they're decentralizing the entire process, extra money that goes into the reinsurance market pool would be given to investors. So the investors are sitting behind the actual risk pool and getting that extra money. Ideally, though, if that risk pool is making a lot of extra money, more investors will pile in to lower the pricing. And that therefore saves people money. So rather than taking outsized profits, you'll eventually fall back to an equilibrium where you're making enough money to attract investors to support the risk pool, but not so much that you're overly charging the insurers on the front end. And so in this case, rather than one insurance company that does everything, you have each person playing their own part in the ecosystem and running much more efficiently as a result. And Etherisc, by creating all this software and being part of the system, they would be able to make a modest amount of money as well for being someone that's contributing. If you're creating programs that pay claims and that, in this ecosystem right here, somebody could easily log on and create a system, theoretically could code up a parametric flight insurance product just like they have and make money from creating that product. And somebody else could also make their own product and compete with that flight insurance product. The idea is that there's really no barriers to innovation in an ecosystem such as this. And there's really no way that there can be entrenched interest because it's open to anybody who can really come and design a better product and something that's more friendly towards insureds. Now, this is a great view, and I wholly support this, but the reason that we started the presentation of the insurance industry is I did want to make clear exactly how complicated certain coverages are. So Etherisc will likely focus on much simpler coverages to start out to get the product going. They've also been testing out hurricane coverage for parametric insurance for Puerto Rico, for example. So that might be if our hurricane of 2.0 or above passes through Puerto Rico, a claim would pay out. It's not going to happen in one fell swoop. It'll be a very slow process, but I really wish the best to Etherisc and that they achieve these aims and change the insurance industry for the better. Do you have any more questions for today? I hope that wasn't too fast and made some sense, and hopefully whether you're from the blockchain background or insurance background, you learned a bit more today. Thanks so much for listening, guys. And feel free to email me with any questions or follow up. Thanks so much. Bye.